this video, I will describe to you the meaning of performance materiality. First of all, we need to understand the meaning of maturity level in the context of audit so that you get an idea in order to answer your questions in audit and assurance paper. Maturity level simply means the misstatement, including omissions, that can be expected to influence economic decisions of the users. For example, your entertainment expense in the financial statements is more than the maturity level, then you can say that the entertainment expense is material. Auditor will base on auditor's judgment to set the maturity level at the planning stage. So say for example, auditor have set the financial statements maturity level at 50,000. Any misstatement, including omission more than 50,000, and auditor have find it out, auditor will not be giving true and fair view for the financial statement. Hi everyone, my name is Yap Wai Wing, and I'm the lecturer for Audit and Assurance paper. So we look into this sample here. Financial statements whole set is here, and auditor have selected the samples and performed the audit procedures. Among the sample size, auditor have find out some of them are misstated, and management choose not to correct those misstatements. So this misstatement will continue remain in the financial statements. We call it as uncorrected misstatement. On the other hand, some part of the financial statements which is not being selected by the auditor may include a misstatement as well, in which auditor doesn't detect them, and they are known as undetected mistakes. Now, I would like to give you an example. Let's say uncorrected misstatements, auditor has identified up to 35,000, and undetected misstatement, auditor didn't know about it, but let's assume it is 20,000. So in total, there are actually 55,000 for all the misstatements, which is supposedly auditor shouldn't give a true and fair view. But auditor may not know about it because auditor only can see the 35,000 uncorrected misstatement in the sample size auditor has selected. So looking into 35,000 and overall financial statements materiality, auditor will give true and fair view. But in fact, the financial statements are materially misstated, having a total of 55,000, which is more than 50,000. So in order to reduce the risk that auditors might be giving a wrong opinion like what you see in this case, auditor will need to use a lower level of performance materiality, which is what we so call it as the performance materiality at 30,000. So when auditor have identified uncorrected misstatement, 35,000, auditor will say, no, this is not allowed because it has been greater than performance materiality level. The management to make changes to the uncorrected misstatement. 19,000 remain as uncorrected misstatement. So auditor will say, okay, 19,000 is below performance materiality level. Auditor will accept it. So even though auditor didn't perform the 100% audit, probably there are some other undetected misstatements are included in which auditor may not know. These undetected misstatements, together with uncorrected misstatement, both are just 39,000, which is still lower than the financial statements maturity level. So auditor will be safer in giving true and fair view for the opinion. So in case examiner asks you, you can write down the definition based on these three key factors here. Yeah.